Tinian Defies Veto. Unveils first U.S. public USD stablecoin on eCash network. What happens when a remote U.S. island challenges mainland caution with digital audacity? Tinian's stablecoin push isn't just about crypto. It's a stress test for how far local governments can go in reshaping their economies through blockchain-powered autonomy. Tinian, a small island in the U.S. Pacific territory of the Northern Mariana Islands, jolted U.S. crypto policy by becoming the first public entity in the United States to receive approval to launch a USD-backed stablecoin. The move follows a successful vote by the Northern Mariana Islands House of Representatives to override a veto from the territory's governor. The new legislation allows the municipality of Tinian and Aguiguan to issue the Tinian Stable Token, formerly named the Marianas US Dollar (MUSD). The stablecoin will be backed by cash and U.S. Treasury bills held in reserve by the Tinian Municipal Treasury, and launched on the eCash blockchain, a Bitcoin Cash ABC fork rebranded in 2021. The bill also authorizes Tinian to issue licenses to internet casinos, tying the digital asset launch to tourism and online gaming. With a population of just over 2,000, Tinian is seeking new revenue streams as its economy struggles. Tinian overrides governor's veto, approves Mariana's USD stablecoin. On May 9, the territory's 9-member Senate voted 7-1 to override Governor Arnold Palacios' veto. Days later, the 20-member House followed with a 14-2 vote, clearing the two-thirds majority needed to push the bill through. Governor Palacios vetoed the bill in April, citing legal concerns and a lack of enforcement measures to prevent illegal gambling. In a letter, he warned that the legislation may be unconstitutional and that its scope couldn't be limited strictly to Tinian. Supporters of the bill argue the move could bring in much-needed revenue without burdening the government. "We need this legislation to unlock our potential," said Republican Representative Patrick San Nicolas, a member of the Tinian delegation. "This bill does not depend on tourists or federal subsidies. It builds a digital industry generating revenue from a licensed jurisdiction." The Tinian government has partnered with Marianas Rye Corporation as its exclusive technology provider for the stablecoin infrastructure. The firm's co-founder, Vin Armani, urged lawmakers to reverse the veto ahead of the vote, claiming the bill could attract billions of dollars of investment and tax revenue to the islands. However, not everyone agreed. Independent Representative Marissa Flores expressed concern over the bill's connection to online gambling. "Every time we talk about casinos, there's always some kind of bitter pill to swallow," she said. "It is true, we are in dire need of money, but what I don't like is when we are desperate. Every time we're desperate, it always seems that we come back to casinos." Despite the criticism, the bill passed and is expected to go into effect before July. Governor Palacios maintained his objections, warning that the measure could be unconstitutional and lack proper safeguards. Still, with both chambers of the legislature in favor, Tinian now leads the way as the first U.S. public entity to authorize and prepare to issue its own dollar-backed digital currency.